Ladies and gentlemen, boys and girls, welcome back to the Daily Stack Report. Today we have a lot to cover, but first, I want to remind you at 100 subscribers, we are giving away this beautiful 1996 American Silver Eagle. So make sure you hit that subscribe button, hit like, it helps the channel, and let's get into it. Right now, gold is sitting around $5,089.50, guys. I can't speak right now. I'm so excited. Silver is at 84.64 currently for spot, with futures hovering around 84.48 right now. Currently, we have broke above this trend line. We've bounced off of it. If you remember right here, we broke above it on Monday, February 9th, and we kind of hovered around it, tested it twice, and on the second time, we fell back below it, but we teeter-tottered all the way with it, kind of fell a little bit lower, and before climbing and resuming that uptrend. Remember, whenever we break a trend line, we confirm a breakout, it typically rises pretty high. This morning we hit around 86.16 before falling back down to that coveted 82.57 level. Now we are back up above it. Am I bullish on silver? Yes, I am. But guys, I want to fill this gap over here at 77.94. So don't be surprised if we come back down. At some point, we will come back down to $77 area. I hate to be that guy, but it's just how market dynamics work, guys. Currently, what I'm watching is this bull pennant play out right here. From this high over here down to where this tip is. This should play out by Thursday, guys. I'm guessing around 7:30 p.m. If I had to put a pin in it, we're going to figure something out where this is going to go. Do I want it to go higher? Yes, I do, guys. So I'm also checking this trend line, see if we test it again, see if we come back down below it. That's kind of what I'm searching for over this next day. But I want to kind of go into what's driving today's headlines. When the bond yield drops, the opportunity cost of holding gold and silver drops too. Metals don't pay yields, so when bonds pay less, gold suddenly becomes more competitive. That's simple math, guys. Lower yields equal lower cost to hold non-yielding assets. So when traders saw yields slip, money rotated back into gold, and silver exaggerated the move like it always does, guys. We're currently up 4.5% today. That's $3.67. You can kind of think of it this way. Gold moves on monetary shift. Silver moves on monetary shifts, but louder. Okay, guys, it was more of a repricing today. Now let's go over retail sales that came out today. Retail spending is a major chunk of U.S. GDP. When spending slows, markets start thinking, is growth cooling? Is the Fed done tightening? Do rate cuts come sooner than expected? That shift in expectations changes positionings immediately. And guys, if you can hear my dog barking in the background, I'm so sorry. I guess the mailman was coming to the door or something, but he tends to bark sometimes, so sorry if you hear that. But anyway, going back into it, the dollar weakened a little bit today. That is another key factor going into this move that I see right now. Metals are priced globally in US dollars, so when the dollar falls, gold and silver become cheaper internationally. Foreign buyers step in, global demand increases, and this isn't emotional, it's a currency math, guys. So keep that in mind. Anytime you see the dollar index start to drop, means precious metals are probably about to go up a little bit. So I like to keep that in mind as well. Now here's a part that matters long term. Central banks are still buying gold, not retail investors, not YouTubers, central banks. So that's the most important thing, and that's really what's going to drive a lot of these moves. Countries like China and other emerging economies are accumulating gold reserves and silver reserves as part of a long-term diversification away from dollar dependency. So that means that this is a structural demand and that absorbs dips, creates long-term floors, and reduces downside over time. Retail traders trace breakouts. Central banks build positions quietly. There's a major difference, guys, when we're talking about that. So here's today's big takeaway. Short-term moves are driven by yields, dollar strength, and economic data. Long-term trends are driven by central bank accumulation, currency diversification, structural inflation, and commodity stockpiling. And right now we're seeing a lot of bank accumulation and currency diversification as people start moving away from the US dollar. And so that's kind of a bad thing for the US dollar, but at the same time, it's a good thing for the precious metals, the thing that we have been advocating for years and years. And so it's kind of a bittersweet moment because obviously you don't want to see the US dollar die, but it is beautiful seeing these silver and gold and other precious metals kind of continue to rise. But guys, that's all I have for today. Make sure you stay tuned as we watch this trend level. Put this on your map as well whenever we're looking here. Remember this $78 gap, because last time we gapped up and didn't cover it, we went from $120 all the way down to $69, guys, and nobody wants to see that again. So I'm sure everybody would rather see a $6 drop in the short term to cover some ground right here in this $77 range or $78 range, then see a huge run up again, continue by another down drop, guys. So make sure you keep that in mind whenever you're charting your silver out. Keep those key things in mind. Yes, we love a good run up, but we also love a healthy run up. That's more important than how high the price goes, is the health. And seeing how stable this has been right here is very, very bullish. We're kind of coiling right here, guys. We're waiting for a big run up right here. This is what we want to see. Within a week, I'd love to move $5 a week instead of $20 a week. That is a lot more sustainable than any other type of sharp incline that we can see. So guys, as always, make sure you're stacking smart, stack safe, do what you can, when you can, and how you can. And as always, I'll see you guys tomorrow.